Hello, here's Paul again with the second episode of how I try to be profitable by using the DGR indicator. As already explained in my first video, I am not one of the creators of this beautiful indicator. I'm still quite new user of it, using it now for about 3 to 4 months. And I learned some very easy ways to be quite profitable in using this DGR. So if you want, you can go back to the first video where I explained the different aspects of the DGR Assist and the DGR 2.0. So this is more or less just in two different indicators now, because it's just very full of different possibilities, what you can do and how you can use them. And but I will go and explain more or less the same techniques I did in the last time, just by showing you another example today. And I hope it's easy to understand and my English is proper enough. Before I start to show you my trading example, which is actually some weeks old, but it's from the end of February, I will point out again the most important aspects of the indicator I used. Like already said, there are a lot of more lines and indicators available in the DGR, but I just took out some of them. The most important is this DGR line. This is like the heart of the indicator, which shows you when we are above the DGR that we are in an upper movement, in a bullish momentum of the trend. And when we are beneath this DGR line, we are more going down. So like you see here, we crossed this DGR the first time, and until we break it, just take it more or less from here, and we really break it here. So you see the price went about 8% up. And if you go just for the next, you will see here it's crossing it. We come to this explanation later, but you already can see it's really going down when it's going beneath it. Here also, if we just go a little bit back, you see we crossed it over here, and from this point, by crossing it to the point where we break it to the upside again, we were losing more or less about 4%. So you can just note that when you are beneath it, the price is going down or more sideways, and when we are above it, the price is going up. So this DGR line is the most important part, and I think it's also part of really every strategy of the different strategies which are possible with the DGR. Other lines which are very important are the buyer line and the seller line. And these two lines are showing you where the buyers and where the sellers of the particular time frame, in this moment it's a 50-minute time frame, are sitting. So at this point, when the price is coming down to this point, in the 50-minute time frame, the buyers are waiting to buy, and here at this line, when the price is hitting it, the sellers are sitting. Connected with these two lines, we have the blue line. It's called the 50-50 line. And this is not really in the middle of the seller and the buyer line, but it represents the point where buyers and sellers are more or less equals, and where the price is maybe changing, maybe not. So it's really like a 50-50 chance, more or less, if you buy or sell at this point, but it shows you more or less where the price will take or will have to make a decision to go up or down. And another important line which I want to point out are the green one and the red one. So here is the green one. It's like the uptrend, or let's call it the uptrend. And this one, the red one, is the opposite one. It's the downtrend, which is more or less the line when we are when we cross this line, this green line you see here, it's crossed, it's changing into red. And the other way around, when we cross the red line, you see it's changing into green. So actually, it's just possible that green or red are existing. It's never the same in the same time. Here it's the green from here to here. Here is the red from here to long way down. So which means when the green line is appearing in the chart, we are in an uptrend. When the red line is appearing in the chart from here to here, we are in a short downtrend, or from here it starts to down there, we are in a downtrend. So every time when this line more or less is changing in color from red to green, from green to red, the momentum of an uptrend is changing to a downtrend, or the momentum from a downtrend is changing into an uptrend. One more important thing are these ones here. These are the Fib boxes, which are correlated to the Fibonacci retracement levels of this price. And they are not calculated by 15 minutes. In my case, you go for the assist to change it. They are calculated in a daily matter. So ein Tag in German and English would be 1 day. So these are the Fibonacci boxes in a daily perspective. And you find them beneath the price, and you find them above the price for sure. And all the time when the price is more or less hitting these boxes, we are coming into a strong support area or in a strong resistant area over here. Is there anything more I want to point out? I would say for this moment, not really. I can, just to make it a little bit clearer, take out the regression line, which isn't really part of my strategy. And I can let in this one. This one is the step line. It's not main part of my strategy, but it's good to have and good to see, because when the price is crossing this gray step line, the momentum really changed. So we are already here in a downtrend indicated by this red line. But every time when we are hitting this big gray line, it's really like the main decision moment. Do we continue being in this downtrend, or is there a chance that the price is going back up? So being beneath the DGR, being in a bearish momentum, and being beneath this gray line is like, okay, now everything is lost. We are really going to go down. So here you see, for example, the price went down, 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 down. We changed from green to red, but the price was catched by this gray step line, and at least for a moment the momentum tried to go back to bullish. It failed. It couldn't break this red bear trend, but at least it tried to break it again. It couldn't. So now when it at this point went down this gray step line, it was really clear that the bearish momentum will continue and the price will go more down. So with having that explained, these are really the only indicators I took out from the possibilities the whole indicator is giving you. And I will just show you now a trading example. I went for, and which was really profitable for me. So you see here the price came down this DGR line and bounced on the 50-50. So you see really how perfectly it bounced on this line. So you could say, yeah, the price once one more time try to come out of this bearish momentum, which already started by crossing the DGR, but hitting the DGR again, being in the Fibonacci box, which is here, and having this 15 minutes seller line gave me an opportunity to enter a trade, to went into this trade as a seller. So I decided to go short on this chart and entered my short trade here. It wasn't a very big position, to be honest, because to make big decisions and big movements, I would maybe hope to have one more or two more confirmations of this line. And it also didn't really came up to the line, but I saw, okay, it has problems to come more up, so I went into a small position with a small leverage. If it would go more like this, and maybe then this, and then go down, I would for sure make a next position over here and would make a bigger position over here, because it's confirming this seller's line. But by not really reaching it and just reaching it the first time, being under the DGR, I went into the trade, but not with a very big position. But either ways, it was a good decision, because you see the price went down and now also broke this 50-50 and came the first time to my 15-minute time frame buyer line, this line. So this is normally the point where the first time I take profit. So from here, I'm still drawing. From here to there, you see this is already 5%. With a leverage, I think I would have at this point around 3 to 5, not more. Out of the explained reason, I would have already a gain of 9 to 15%. So this is the first time when I take some of my gains, because now I'm on the buyer line in this time frame, and it's possible that the price could go up again. So this is where I took my first percentages. But the price decided to go more down and was hitting the first Fibonacci box. So this is normally the second time when I take out some of my percentages, because going to this support level, prices could go up again. But what happened is it went to this 50-50 line. I could at this point see, okay, it's hitting it again. I could potentially increase my short position again over here, but it just hit it at one time. Again, if something would happen like this, hitting this line again, I would maybe decide on the second hit to increase my short position, but it just hits it one time. So normally when it's just a one hitter here, it's a chance to go into a bigger short position, but it's risky. If it would be like that, I would have a second confirmation of this 50-50 line, as well as the DGR line, which comes down, as well as the bear trend, the red bear trend coming down. So this would be a much better signal to increase my my position in the short. So I haven't increased it, I just went with what I had left inside of it, and it now crossed this Fibonacci boxes. and came down to this line. And this line is a line which is drawn by myself, so I will just explain it quickly. You see it's marked with 1 hour. To make this line, I went to my 1 hour time frame, and you see it's, whoop, computer is a little bit slowly. Now we are in the 1 hour time frame. It's exactly the same chart. And you see what I did? I draw my 1 hour on this 1 hour bias line. So I could just draw it like this. Bam. This is my 1 hour bias line. And then I mark it within a 1 hour and go back to my 15 minutes. So this is actually how this 1 hour line comes into place. I draw it in the 1 hour time frame, and now being back in my 15 minutes time frame, you see this line perfectly running over here. So I do this because I want to know where are the 1 hour buyers, and which is in fact, because it's a bigger time frame, a more strong signal than the 15 minutes time frame. So I usually take at this point again some of my percentages, some of my gains. What happened after that? The price went even more down, and so at this point I took another time my percentages because it came down, was just like hitting it slowly here, and I expected, okay, maybe now it will go up because this candle was just so huge. So I took another percentages over here. This is not really something you have to do. I think this is wise. Here I could be more slowly in my actions and maybe just not sell here and wait what the price is going to do. But on the 22nd of February, long ago now, I decided to take more gains over here. This is not really something which is, yeah, let's say, necessary. But the price went again, you see, up, trying to break this red bearish trend. It couldn't, and come back to this line over here, which is my new 15-minute trend. And by doing that, hitting it, I just decided, come on, I take out some more gains. Why? Because we crossed the DGR. So we crossed the DGR. So now with doing that, I got the confirmation that now maybe the momentum will change. It hasn't broke the bullish, the bearish trend, but anyway, because of that, I'm more looking out now for finding an exit maybe, because I'm just knowing, okay, we are above the DGR. Sooner or later, the price will go up again. So I took percentages out here, and I would say at this point, maybe I have like maybe 20%, 25% of the initial position open. All the rest would be out now because we are above the DGR. But the price decided to go down again and again. So you couldn't know this before. At this point, I took again some percentages out. We are beneath the DGR, but just slightly beneath the DGR, hitting again a level where I was just like, okay, it can't go down for all the time. So I was taking again some percentages out. It's the same like here, not really indicated by the DGR, but more out of my experience and being cautious. I took out more of my gains. But yeah, look, it went even more down. So maybe by coming here and coming here, a second bottom on this buyer line would be a more perfect point to take out my percentages. But yeah, I'm just like cautious, so I took out some more percentages here. And what happened now is it broke the DGR line again, failed by breaking the bearish trend, but it now was short before hitting this line, this 15-minute buyer line, and it couldn't. So it tried it once, it tried it again, and it couldn't and went up. And by being here and couldn't hitting it again and going up again, I decided to flip, which means I really understood that the line here will go up again now. We are really above the DGR. We couldn't hit this line a third time. So at this point, I decided to flip, and to flip from bearish to bullish. So I closed my short trade and went into a long trade, which for sure wasn't a big one, because we were still in a bearish trend. But by saying all this, being cautious, taking out more and more of my short position, crossing the DGR again, not being able to break or to even touch this line, I decided to go into a flip and to buy and to go into a long position. If the price would do something like that now, bam, this would be a much bigger possibility and a much better confirmation that the price now will go again, because it would say, okay, I accept this line one time, two time, maybe you can't count this because this line is higher, but when you see this line is over here, it would accept it one, would not even be able to come here, and now accept it a third time. So this would be a much better signal, in fact, to go into a bigger long trade. Here I just decided to go in a very small long trade. But the price went up. At this point I was sure my decision was good, because now we are in a bullish momentum. And it came to this line, and you remember this was my drawing 1 hour bias line, former bias line, which is now the resistance. What was more or less like a support over here is now going into a resistance, and I like to leave them in the chart a little bit longer. I will not leave it in there for a month or two, because it's just a 1 hour line, but I will leave it in there for a week or two. And like you see, the price is kind of accepting this line, this invisible line, and it's just visible because I draw it by myself. And you see it tried to reach it, couldn't reach it, tried to reach it the second time, couldn't reach it, tried to reach it the third time, and when this candle went bearish, I decided, okay, this line is somehow active, so I decided to take my profits. Normally I would wait until it hits the 15-minute line, which is this one, plotted from the indicator, but it couldn't. So I decided already here to take out some of my profits. Actually, when I see that the price is too weak to come here and already switching the direction on this former line, I take out like 30-35% of my gains. Coming here and bouncing, coming to this bullish trend line and bouncing is a very bullish signal. I would be normally very happy that I haven't taken out too much of my gains over here, but you see it stays very flat. It's bouncing but staying very, very flat, so cautious. And being here, hitting the DGR line again, crossing the DGR line again, I decided to be out of my flip. So my flip just went up a little bit. Actually, it was for sure profitable by 28%, but by having just a small long position, I decided to be clever at this point and to say, okay, maybe my flip next time would be bigger by going even more up. So I went out of the trade at this point. Now we were again beneath our DGR line. So what I'm doing at this point, I'm waiting for some confirmations. So it broke here the bearish trend and went bullish again, which is nothing I'm really waiting for, because now I'm waiting for bearish signs. But what happened is that it went to this 50-minute line and hit it at once, hit it a second time, and hit it a third time. And by hitting it a third time, I was brave enough to take this third confirmation as an in point for me to go short again. So at this point, I went into a new short trade. It broke the short bullish momentum, and at latest here, I was sure, okay, my decision to go in here was a good one. And if the price went here again, for sure at this point I would increase my short position this time, but it didn't and went down too fast. So I hadn't a second chance to increase my short position. But nevertheless, I was in and was already getting some gains. Here you see again the plot of the 50-minute time frame. I am taking out my percentages, and here you see my new 1 hour line. I will not switch back now to this one, but you know how I did it. After hitting this one, normally after hitting the 50-minute time frame, I'm going to the 1 hour time frame, drawing a line on the 1 hour time frame buyer's line, and going back to my 50-minute time frame, just exactly like I did it before. So I have this line now in my 50-minute time frame where I will decide to realize some of my profits. So first time here, second time here, the price went up. I could maybe over here go for a short to increase of my short, but it's just one, and by seeing what happens here and going up now, I wouldn't be brave enough to go in a bigger short position here. If it would be like 2 or 3 times, I would go for that. But by just hitting it once, I decided to not do anything and just see what the price is going for the next moments. It came down again for a new 50-minute to our new 50-minute buyer's line. So I did nothing. It went up, crossed the DGR, crossed the bearish trend momentum, and showed me, okay, now the price is getting strength. So here I decided to sell most of my short position. Like said, at this point I would maybe open 10%, 15% would still be open at this point. All the rest I would take out. My stop loss for sure would be somewhere here, because here is my gray step line, which is like really the last bastion, the last chance where prices can go down again. And actually it happened. So if the price would go up here, my stop loss would hit, but it just managed to stay beneath that line. So I'm happy that I let some of the position open, but seeing what happens here, coming back to my self-drawn 1 hour buyer's line, hitting the 15-minute 50-15 line, the blue one, at this point I decided to go into a flip. So I closed my position. Also by going down, I decided here to close my position and to go into a very small long trade, which first I realized some gains here. Why? Because we again hit our 50-minute time frame. So all the time at this point I take like 20-25% of my new long trade going up. Here it confirms our trend, trying to go up, couldn't, trying to go up again. And what is now happening here, you see here is our red line, our bearish trend, which we are in for a short time. So it can't overcome this trend. It can't come back into a bullish momentum. Plus, we are now going beneath the DGR again. So at this point, I decide to take out some of my position, and by now breaking the blue 50-50 line and making this big candle going down, I am out of the trade. So you see, this small flip wasn't very profitable, but I could sell at 8%. Some of my position I could sell at about 10-11% again, and then I was out at about 7%. So I think this is enough at this point. It's I hope it showed you again how to use the DGR. And for the next weeks, I will continue to show you some more of my trading examples to make it more and more clear how my strategy works. Have a nice day and goodbye. Ciao, ciao.